Welcome back to our weekly market insights. Robinson Sentongo, Senior Associate at Cornerstone Asset Managers, and I'm here with
Twine Rehema, Legal and Compliance at Cornerstone Asset Managers. This week we have interesting stuff that has happened again. We'll start with the Treasury Bill auction that happened on the 17th of June, 2026. What do you have to say about the results on that end?
Yes, so for the Treasury Bill auction on 17th, we saw there were massive rejections on the 6-month Treasury Bill, which is the 182 days. The government tendered about 56 billion of that and accepted only 10 billion. And then we also saw the 1-year T-bill maintaining the money market yield of 12%. That's where it was in the last auction and the auction before that. And these results also show investors having more interest in the 91-day bill and the 1-year bill, of course. And there may be various reasons as to why this could happen. Firstly, investors may think that interest rates may decline in the Treasury bill market. Yeah. And maybe they prefer to lock in the 1-year bill, which is a longer term, at 12%, which is a good enough rate. And at the same time, investors may also prefer to have this 91-day Treasury bill because it's something that can give them flexibility because it's very liquid on the market. If they see they want to do something else with their money, they can easily sell it off and do something else with their money. And that's something that will be harder for them to do if they hold this 6-month bill. So that could explain why.
I also noticed that you've highlighted the point of the 91-day bill becoming popular amongst investors, and I believe it's more of a general thing that now people are interested in these as investment avenues. Ordinarily, someone would be comfortable leaving their money on their bank account honestly for 3 months, but I think there's been some awareness and people have reached a point where they want to utilize their money to the maximum, whatever comes, their way. So I think it's a great movement across the board for the nation. So I guess it's a plus for the government. They'll be getting some good money from individuals. You've also explained why the 182-day bill is not as popular as the 91-day and the 364. Now, what exactly does that mean? Because if government allocated a bigger figure and then it rejects most of that money. Now we see that rejection is coming from the government, but also it's not as popular amongst the investors.
Yes.
What exactly does that mean? What does the government move this money to any of the other two areas for the bills, or it just moves on from the whole idea of getting the money?
Thank you. Another reason for the rejections is mainly disagreements between government and investors as far as yields are concerned. You could find that maybe the investors find this particular tenor to be more risky and they are not willing to take on lower yields. They want to be compensated. And at the same point, the government is feeling they don't want to borrow money at very high costs. Yes. So that could be one reason. But then we also see in the demand was higher in the 91 and the 364. Compared to this 182 bill. And that mainly explains because the government accepted relatively higher on the others compared to this very one.
Or compared to what they had set out to take from the 365 and the 91.
Yes, they took relatively high amounts on that.
Okay, so that compensates for basically the money they rejected when it comes to the 182-day bill.
Definitely.
Okay, that's interesting. We've also seen some changes. By the time we started this, Trump had announced a 14-point memorandum of understanding with Iran. And this is aimed at, it's really a preliminary stage towards a peace deal with Iran. And there are some undertakings that have been made by the USA and some that are being made by Iran to ensure that these parties reach an understanding. The major point that has been the talk of town has been the closure of the Strait of Hormuz. And it's among the the points of discussion in this MOU, and they'd like to have it opened. Now, the moment this announcement came up, oil prices went down internationally across the world. I don't think we've registered changes in Uganda. So take us through what that might mean. Why haven't we seen changes in the fuel prices in Uganda yet? And also, what does it look like on the shilling?
Well, interesting question. Yes, when Trump announced that all military activity should cease and the Strait of Hormuz be opened through this deal, we saw immediately in the nations like USA, fuel prices fell.
Yeah.
But in Uganda, we are not yet seeing that effect. Well, this could be due to various reasons.
Yeah.
Firstly, I think the Uganda National Oil Company definitely must have purchased a huge stock of oil, preparing for maybe a shortage or a crisis. And that oil was purchased at relatively higher prices. So that stock firstly has to first get consumed. And then after that, when we start shipping the fuel that is at the lower costs, we can then see our fuel prices also falling. Keeping in mind that shipping fuel doesn't take 2 days.
Yeah.
I think shipping oil can take between 7 days to, I think, 30 days even. So there will be a lag for us to see a change in fuel prices in Uganda.
Okay.
Yeah. And then you also mentioned the currency. Yes, so immediately after Trump announced this deal, this memorandum of understanding,
Yes.
we saw the Uganda shilling appreciating against the US dollar. Last week, we were at levels of 3,700 shillings, UGX per US dollar. But this week, we've been seeing the dollar averaging about 3,642 or 3,645 at those levels. So that is a massive, I wouldn't say massive, but it's relatively good appreciation in the Uganda shilling. Of course, now this is a signal of geopolitics being able to affect our domestic markets. Yeah.
Coming back to the Ugandan context, the government has also released a new bond and treasury bill auction calendar. What does that look like on the investment end?
Yes, a new calendar has been released for the 2026-2027 financial year. And we see that this calendar is important to the investor. Of course, the investor is able to plan their cash flows, when they can invest, when they should know when the auctions are so that they properly plan their liquidity. And in this calendar, interestingly, we are seeing on 9th September, the government will issue a new 20-year bond.
Okay.
And then 2 weeks later, on 23rd September, they will also be issuing a new 15-year bond. So the investors are keen on seeing how these bonds come out, what coupon rates, what yields. We're going to continue monitoring and watching, see how it unfolds.
Okay. I guess there is a lot to watch out for this calendar and what comes out of the peace deal between the USA and Iran. We are waiting to enjoy the benefits, if any, from this whole process. We'll be here next week. Thank you.
Thank you.